You know, going through a high-conflict divorce, it's like sailing straight into a storm. And just when you think you've got the waves of custody and assets figured out, a whole new weather system rolls in, the tax storm. So let's dive in and figure out how to get you from that chaos to a much, much calmer place.
Look, I get it. Divorce is hard enough on its own. But in these really high conflict situations, the tax system, well, it becomes another battleground. It's a weapon people use to hide income, to withhold cooperation, and just to create more chaos. But being prepared, that is your best defense.
So before we really get into the nitty-gritty, let's just set our compass, right? This is our North Star. This isn't about trying to squeeze every last penny out of a tax refund this year. The real goal, the most important thing, is to make choices that protect you and most of all create that long-term stability for your kids. That's the guiding principle for everything we're about to cover.
So this is where it all starts. The minute that relationship breaks down, that familiar, predictable tax picture, it just shatters right along with it. Your filing status, who claims the kids, how support is treated, suddenly the whole shebang is up for grabs. Okay, so this slide is absolutely critical. It lays out the very first big decision you have to make, and it's a huge trade-off. Filing jointly, yeah, it's tempting. It almost always means a lower tax bill. But, and this is a huge but, look at that risk column. You are 100% on the hook for everything on that return. Every penny of tax, interest, and penalties, even if your spouse is the one hiding income or making up deductions. Filing separately, it might cost you more upfront, but think of it like an insurance policy against their bad behavior. And that brings us to the big, unavoidable question you have to ask yourself. Be brutally honest here. Do you fully trust them? If there's even a hint of financial dishonesty, cash deals, shady business stuff, filing jointly is a massive, massive gamble. It might be totally worth and a little more in tax now to save yourself a world of legal trouble later.
All right, let's talk about the big one. The issue that causes more fights than almost anything else. The kids. Nothing, and I mean nothing, brings out the conflict like the battle over who gets to claim the kids on their taxes. This is where things can get really, really nasty.
And you can see why, right? We're not talking about a few bucks here. We are talking about thousands of dollars every single year. When you add up the child tax credit, head of household status, all those other benefits, the financial stakes are incredibly high. This isn't just a number on a form. For a lot of people, this is the money that keeps the lights on.
So, how do you unlock all those thousands of dollars? Well, it all comes down to this one piece of paper, Form 8332. The source material calls it the golden ticket, and honestly, that is the perfect way to describe it. Here's how it works. For the non-custodial parent to claim the child, the custodial parent, that's whoever the child lives with for most of the year, has to sign this form. It's literally you giving away your right to claim the dependency. That's what makes it so incredibly powerful.
And because it's so powerful, you better believe it gets weaponized all the time. You'll hear things like, "Oh, you want me to sign this? Well, I'm not signing it unless you agree to whatever they want." Or worse, they'll take a form you signed for 1 year, photocopy it, and try to use it again and again. It's just a perfect example of how a simple text form can be twisted into a tool for control.
So how do you stop this? How do you diffuse this yearly bomb? You have to build a rock-solid, predictable system right into your court order. First, be ridiculously specific. Spell out exactly who claims which kid in which years. No ambiguity. Second, set a hard deadline. The form has to be delivered by, say, January 31st. Every year. No excuses. And third, and this is so important, when you fill out that form, never write all future years. You write the specific tax year, like 2024 only. The why here is so important. It's not just about taxes. It's about preventing a fight every single January. It saves you future legal fees and just so much stress. You're turning a potential hostage situation into a simple, boring, enforceable process.
Okay, so we've talked about the yearly filings, but there are other huge issues lurking around. The big assets, like your house and your retirement accounts, they can be full of hidden tax landmines that can blow up years after the divorce is final.
The family home, wow, the emotional pull to keep it is so strong, right? But you have to separate the emotion from the cold, hard financial reality. Can you really afford the mortgage, the taxes, the inevitable repairs, all on one income? Is this about what's best for your future, or is it about winning the house?
You know, sometimes the smartest, most stable decision for everyone involved is to just sell the house, split the money, and give both of you a truly clean financial start.
And your retirement funds? They're a huge target. To divide a 401k or a pension, you need this special court order called a QDRO. That's QDRO. In a nasty divorce, an ex can just drag their feet on signing it, and that blocks you from getting your money. Or they might conveniently forget about an old account they had. The key takeaway here is you have to get a full list of all the accounts early on and push your lawyer to get those QDROs finalized as fast as humanly possible.
So, with all these potential fights and hidden traps, how in the world do you protect yourself? Well, it all boils down to one simple, incredibly powerful idea: documentation.
I know it feels like a chore, but your absolute best defense is a paper trail. Every single document, every receipt, every email, it's a piece of your armor. You have to reframe this in your mind. It's not paperwork, it's self-preservation. This is your shield. Why? Because when there's a dispute, whether it's with your ex or even the IRS, the person with the better records always wins. It's really that simple.
So here's what you do. You create a tax binder. It can be a real binder or just a folder on your computer, doesn't matter. This is your toolkit. And inside, you're going to keep your court orders, all your past tax returns, copies of every single signed Form 8332, and, this is so important, a simple log of where the kids slept each night. Just a calendar. That little calendar is your proof of who the custodial parent is. It can save you in an audit.
Okay, now let's talk about a really tough situation: the business owner X. This question right here, this is for anyone out there who sees their ex posting pictures from fancy vacations, driving a new car, while somehow claiming their income is surprisingly low. Sound familiar?
You need to trust your gut. These are major red flags. That lavish spending that just doesn't line up with their claimed income, an income that suddenly takes a nosedive the minute lawyers get involved, a complete refusal to hand over the business's books. Do not ignore these signs. They're telling you a story, and it's probably a story that means you need to ask your attorney about bringing in a forensic accountant to find out what the real numbers are.
Okay, we've been through the storm, we've pointed out the biggest dangers, now let's talk about the good part: charting a course to calmer waters and finally establishing your new, independent financial life.
You can literally start taking back control today. Here are 3 things you can do right now. First, go update your W-4 form at work. This makes sure the right amount of tax is being withheld for your new filing status. Second, if you're self-employed, you've got to recalculate your estimated tax payments. And third, and this is huge, separate your finances. Close those joint bank accounts and credit cards immediately. These are simple steps, but they create a clear financial boundary and make a massive difference.
Look, you can handle a lot on your own, but there are some moments when you absolutely, positively have to call in the professionals, a tax pro or your lawyer. If you're ever being pressured to sign a tax return you don't fully understand, don't do it. If there's a business with income that goes up and down, get help. If you start getting scary letters from the IRS, call someone. And if both of you are trying to claim the same kid, that's a red flag to get an expert involved immediately. These are the times you just don't try to go it alone.
And that brings us right back to where we started, back to our North Star. As you move forward and you start making these financial decisions on your own, I want you to use this as your final filter. With every single choice you have to make, ask yourself this one question: will this decision make my child's life more stable, or will it make it more chaotic? Will fighting over this one little thing just create more chaos for my kid? Or is letting it go and focusing on the bigger picture the thing that's going to create more stability? Honestly, that one question has the power to guide you out of the storm and into the calm that you and your kids really, really deserve.